Good afternoon, and welcome to this ACT webinar on developments and opportunities in China's free trade zones. I'm James Lockyer, Development Director here at the ACT, and just before we start, I thought I'd explain some technical points about our webinar setup. There's a menu bar across the bottom that allows you to open various windows, and you can move these around your screen, resize them or minimize them. The green button with a question mark on it down there is for help if you have any technical difficulties, and another button there opens the Q&A window. You can send in questions by typing in that Q&A window. Don't wait until the end to send in your questions, just send them in as they occur to you, and we will deal with them at the end of the presentations. And our practice is that we don't disclose any names. I should add that a recording of this webinar will be available on the ACT website in 2 days' time, along with a separate copy of all the slides. We're delighted to have 3 speakers, 1 here in London and 2 based in Shanghai today, who have a wealth of experience in developing China's commercial infrastructure and facilitating both inward and outward investment. Thomson Reuters have sponsored today's webinar, so on behalf of us all, can I thank them for that support. Foreigners are familiar with China's liberalisation agenda, particularly regarding renminbi becoming a truly convertible international currency and the opening up of internal markets for foreign exchange and interest rates. The pace of change is huge, and one particular initiative has been the establishment of the Shanghai Free Trade Zones 18 months ago, which have created a pilot environment for testing reforms, while immediately facilitating investment and trade between China and abroad. And that's what we'll be hearing about today from Yang Du, Head of China Desk at Thomson Reuters, and joining us from Shanghai, representing 2 of the state-owned enterprises managing the Free Trade Zone initiatives, Eason Shi, who's Senior Manager, Shanghai Waigaoqiao Free Trade Zone United Development Company, and Jessica Zhang, Senior Manager, Shanghai UDC Business Consulting Company. We will then finish with discussion and as many of your questions as we can get through. So let's get started with Yang. Yang is Head of China Desk at Thomson Reuters. He joined Thomson Reuters in 2008, focusing on sales, fixed income, and investment management business development. In 2012, he founded the Offshore Trading China program in Thomson Reuters, providing strategic insights and being instrumental in building the RMB community in London and beyond. As Head of China Desk, Yang is responsible for renminbi and China strategy overall, as well as China financial institutions in Europe and America.
Thank you, James, and good afternoon, everyone. China's free trade zone practice at the moment receives huge attention from all over the world. I think our purpose today is to help every single participant today to understand how to tie in your business into the China's national strategy first of all. Having said that, the free trade zone exercise in China is a nationwide practice. However, it's rather new. Started from 2013, August, receiving the strong support from State Council and Premier Li Keqiang. To yesterday, China now have about 4 free trade zones officially set up, among which Shanghai taking the lead. But to understand the general environment, why this is the moment for China to actually conduct such a free trade zone exercise, as a matter of fact, it is called a pilot project for the nationwide financial reform. When we look at the past 10 years, China keep having the decline in GDP growth in the past, and it's expected in 2015 to have a below 7% GDP growth. Facing the both internal and external pressures, China now has to seek alternative way to develop a nationwide reform strategy. And that is translated into two main aspects. One is the internal financial reform for the whole nationwide economic structure. Secondly, is to internationalize its currency. However, it is a difference for now compared to Japanese yen's internationalization or even US dollar a number of years ago. The full convertibility of a Chinese yuan, it is still a developing subject, among which it is the task for the PBOC to start opening a capital account first of all. Having said that, the PBOC's focus is to start from increasing the liquidity and the circulation of the Chinese currency to increase the usage of the Chinese currency in the international market, and then to consider the convertibility. When we look at the 4 free trade zones, each one of that has a different characteristics. Guangzhou free trade zone, which is around the bottom of the Chinese map, it's on the border to the Hong Kong. Its main task is to push the deepening cooperation with Hong Kong and Macau. So while everyone looking at the free trade zone exercise and thinking about what's the future position of the Hong Kong would be, that is the one key free trade zone to enhance the competitiveness of Hong Kong and also to bring that traffic into the China via the free trade zone. Tianjin, which is one of the gateway in the north, will play a vital role of the logistics advantage and to push the northern economic development for the northern China. Fujian has a very dedicated task to improve the economic cooperation with China and Taiwan. Among all 4 free trade zones, Shanghai has been selected as the leading free trade zone to pilot every single aspect of the free trade zone policies, including the liberalization of the currency, the ease of the compliance and the regulatory environment, and also further to develop the negative list management. When we talk about the China's financial system, it is important to understand what are the core of the barriers stopping the international investors going into China freely. And the debate has been focusing on the 3 things mainly around the opening of the capital account. The 3 things I would like to highlight, first of all, is the foreign direct investment. It is subject to the approval, and it is restricted for the overseas investment directly into Chinese fixed income and the stock market. Secondly, the Chinese residents and the Chinese state-owned companies are prohibited to own the foreign debt, i.e. they cannot buy the international issuers' bonds in China. The third is the China's capital market shall not be open to the foreign capital. That means you would have to apply for QFII or RQFII as a channel to invest into the Chinese interbank market. At this stage, these 3 things hasn't been completely freed up yet. However, the theory of the policy has been announced in the past 2 years by the launching of different free trade zones. So we start to see the free trade zone are actually working as a pilot to loosen up some of these policies restricting these 3 areas to stop international capital going into China. Among all the free trade zones, there's a strong reason why we highlight Shanghai. I will leave more details for our fellow speakers to talk about it. But it's important to understand the negative list from a positive way, if I may phrase it like that. Negative list is a traditional way to manage the international investment to a country. It is meant to clarify the certain areas that international investors are not meant to receive the national treatment. And there is a difference. However, it is also important to clarify what are the forbidden areas at this stage. It is a critical progress by the free trade zone exercise. The original negative list was 190 items. to 2014, it's reduced to 139. By the end of today, actually, it's reduced further down to 122. Today, the Tianjin Free Trade Zone just being announced and fully operate. The very first QDLP fund has set up in Tianjin Free Trade Zone. So without further ado, I will hand over mic back to James and fellow speakers to talk about details, focusing on Shanghai Free Trade Zone. Thank you.
Thanks very much, Yang, for that extremely useful overview. Now, let's turn to Ethan and Jessica, who will give us some further insights into the practicalities of the financial trade zone initiatives. We may have a slight problem on the comms with Shanghai, but we'll work around that over the next couple of minutes. Ethan is a senior manager in the Business Development Department of Shanghai Waigaoqiao Free Trade Zone United Development Company. He has 10 years experience in consulting services for greenfield investment projects in the Yangtze Delta, including incorporation, consulting, and enterprise operational consulting. Ethan has helped a substantial number of foreign companies establish branches in mainland China. Jessica is a senior manager in the Operation and Marketing Department at Shanghai UDC Business Consulting Company. She has over 10 years experience in accounting, taxation, and foreign exchange policy consulting services. Jessica participated in building the Outbound investment platform for the Shanghai Free Trade Zone and is responsible for Outbound investment policy consulting services. Hopefully, Ethan is on the line and can give us his thoughts. Over to you, Ethan.
Thank you, James. Good afternoon, everyone. First of all, thank you for listening to my introduction of the China Shanghai Pilot Free Trade Zone. My company, Shanghai Waigaoqiao Free Trade Zone United Development Company Limited, is a state-owned development company of China Shanghai Pilot Free Trade Zone. We are in charge for the development of 7 square kilometers of land territory, and we owned more than 2 million square meters property in the zone. Just yesterday, our China central government have promulgated a new decree that is approved the Shanghai Pilot Free Trade Zone to expand it with 3 new areas. In this slide, you can see the space is about 28 square kilometers of the China Shanghai Pilot Free Trade Zone. But after the expansion, the area will be more than 120 square kilometers. And the new area is Lujiazui Financial Zone, and Jinqiao Development Zone, and the Zhangjiang High Tech Zone. The China Shanghai Pilot Free Trade Zone is approved by the China central government in September of 2013. So till nowadays, there are more than 23,000 companies established in the zone, and inside there are more than 47 banks in the area, and we have more than 300,000 people working in the zone. We have the area of the China Shanghai Pilot Free Trade Zone has 3 main industries. The first main industry that is for trading, because here is a custom supervised area. So about 65% are trading companies in the free trade zone. And the second majority is service companies. So these are the brand new industry in the zone, because our zone are opening in the policy for foreign investors in service trade. So there is about 21% companies are service industry. And the others 14% companies are referred to the multinational companies headquartered in the zone are referred to the R&D companies and the manufacturing companies. We call these are the traditional industries in the zone. So we see the other chart that is about 10% of the companies are the foreign invested company, and the others are domestic invested companies. The China-Shanghai Pilot Free Trade Zone are reformed in 4 main cores. So these 4 main cores is first one that is the investment management, and the second one that is service trading, the third one that is the trade supervision, and the last one that is the most important is the finance innovation. Regarding to the investment management, we have created a wording in China that is the negative list. The negative list is a list made by the government for the company they do business in the zone. If their business is not listed in the negative list, they can be treated as a domestic company without any limitation. If you like a foreign invested company, maybe you need to apply in the approval or something that is the negative list. And we also can see the list is shortened by the government every year. So in year 2013, there is about 152 items which is listed on the negative list. And the new version of 2014, there is only about 110. So we believe the negative list will be shortened year by year. The service trade is another one core which is reformed in the free trade zone. So as we know, China is limited for foreign investment in some service trade industry. But in the China-Shanghai Pilot Free Trade Zone, there is about 6 spheres opened for foreign investors. The first one that is the financial services, which are marked in red, that is the financial leasing, which is very interesting for foreign investors. Second one, that is the shipping services. Shipping services is also the majority business in China, in Shanghai. The third one is the business services. The value-added telecommunication business attracts many investors to start their business in the zone. The fourth one, that is the professional services. The professional services such as the legal services, such as the travel agencies, they are open to the foreign investors in the zone. And the fifth one, that is the cultural services. So the foreign investors are allowed to setting up joint venture companies in the free trade zone, which is engaged in the cultural business, like the training for technicians. The last one, that is the social services. The medical services is among in these spheres. So the foreign investor can open in the wholly owned foreign invested hospitals in the zone. As we know, the Shanghai Pilot Free Trade Zone is a custom supervised area. To support the development of the zone, the Customs Office has issued 14 reform policies which is targeted to facilitate trading business in the zone. So the main points is including the inbound first, declaration later, safe transportation for goods within zones, manual verification with work order, bounded demonstration and business, maintenance-based service for overseas and domestic market. Now we go to the most important core center for the reform in the Shanghai Pilot Free Trade Zone. That is the financial area. So as we just mentioned, Shanghai Pilot Free Trade Zone is expanded with 3 new zones in Shanghai. So these 4 zones have their own future development target. So the Lujiazui is the core area for financial zone. And the Shanghai World Export Zone and the Shanghai Zhangjiang High Tech Zone is they are financial services for the high tech business developing. the Shanghai Pilot Free Trade Zone is mainly reformed in the financial area for offshore business. Jintiao Development Zone, they will develop their financial area for advanced manufacturing. Recently, the People's Bank of China Shanghai branch has issued 30 new policies, so which is further development for the financial innovation in the Shanghai Pilot Free Trade Zone. Among them, which is attract many companies to establish their company inside the Shanghai Pilot Free Trade Zone to set up the capital account, which is in terms of the cash pool. So there are two main cash pool. The first one, that is the RMB cash pool, and the second one, that is the foreign currency cash pool. So nowadays there are about more than 60 companies. They set up their foreign currency cash pool, and there is about 140 companies that have set up their RMB cash pool. So with the cash pool, the company can remittance and the revenue the foreign currency or RMB freely without the foreign exchange control by the China government. And in the traditional free trade zone, we have a function, so that is for the reform in the trading business. But nowadays, the innovation of the financial area allow the company to make use of the policy that is, I just mentioned, the cash pool. So nowadays, we believe the future development of the zone will further development in the two-way opening up in the financial industry. For example, the cross-border of RMB cash pool. And outbound investment, which attract many domestic companies to setting up their holding companies in the free trade zone. If we compare the Shanghai Pilot Free Trade Zone and the other places outside Pilot Free Trade Zone, but in mainland China, the difference is the company, if they want to make the investment in UK, it only takes 5 days for them to filing all the procedures, and they can remittance the capital to the overseas project if they have a holding company in the free trade zone. But outside free trade zone, they need to apply the approval from the Reform and the Development Committee, the approval from the Commercial Bureau, and approval from the State Administration of Foreign Exchange. All of these procedures will take no less than 4 months' time, and they also take the risk of failure in the application. So that is the biggest advantages for the companies to setting up their holding company in the Shanghai Free Trade Zones. So till nowadays, there is about 280 investment projects. They make use of these advantages and remittance their capital to overseas countries. So among them, there are about 4 projects invested in UK, but we also believe the investment in the BVI and the Cayman Islands will have maybe some portion of these projects will finally investment in UK. So, and as I just mentioned, just yesterday, the Shanghai government has approved the expansion of the free trade zone with 25 points reform in Shanghai Pilot Free Trade Zone. So among these 25 points, there's 1 point referred to the tax treatment for the outbound investment. So we believe the income tax rate will be lower if the company can make use of a holding company in the free trade zone for their outbound investment. And there is a case for the investment through the Shanghai Pilot Free Trade Zone, that is the Honey Capital. They buy Pizza Express while they are free trade zone touring company. So the purchase is completed in July 2014. So that is all for my presentation today. Thank you for your listening.
Ethan, thanks so much. That was really interesting. I think a really good sort of summary of particularly what the Shanghai Pilot Free Trade Zone can offer businesses. We're now open for questions, so please do send your questions in. I've got a few of my own. One that's come in, which I think probably is one for you, Ethan, actually, is along the lines of what level of physical presence is required in the free trade zone. For example, is it sufficient just to have a registered address in the free trade zone, or do you need something? Do you need to see something more?
For the presence in the free trade zone, I believe that is for you need to have a paper office at least. So the paper office may be an office room, but maybe also some part of a warehouse. But a registered address is necessary for your presence in the free trade zone.
Okay. I mean, I had a sort of follow-up to that, which was what's the best way of integrating, or indeed of using, a free trade zone presence to integrate with other parts of your business elsewhere in China? Potentially you might have manufacturing sites elsewhere in China, but decide, well, actually what we'll do is we'll run the holding company in the free trade zone. Is that sort of thing possible?
Yes, it is possible, because the free trade zone companies is China. We are regarded as there is a China-based company, but outside the custom supervision of China. So it is the beneficial is you can do in the foreign exchange, which is regarded like a foreign company. So I believe it is.
Okay, so basically your free trade zone company can be a bridge to the rest of your operations in China.
Yes, as I mentioned, they are regarded as a China-based company. The company in the free trade zone can do business with the other company in mainland China.
Yeah, okay. We've had another question in, which again, I think is probably another one for you, Ethan. Apparently, someone's written to say that his business still sees many Chinese companies asking for payment in US dollars and being hesitant to receive payments in renminbi. And have you any idea what might be behind this? And I suppose also, could those companies be persuaded to take take payments effectively in local currency?
So, frankly, I'm not very familiar with this question, but I believe that is because the internationalization of RMB is in progress. So if you are doing the business, for example, a China free trade zone company doing the business with a company in Hong Kong or in Malaysia, because they have RMB offshore banks in this location. So I believe the company is willing to do the trading in RMB, but if they are doing the business in some countries, there is no offshore RMB market of banks, so will be not easier to do the business with RMB. So they will to make the payments in US dollar.
Okay. I think Jan, you had some thoughts on that as well.
Yeah, the convenience of the payment really at the moment via the individual companies actually fragmented into different provinces and the cities. It is not done centrally from designated area like free trade zone. So, i.e., the tax reform and some of the export subsidiaries were not paid out in renminbi clearly for some local government. So that has been identified as one of the main phenomena for some of the Chinese companies not receiving renminbi. But one benefit of the free trade zone, because you can leverage on the two-way RMB pool, that will be a designated policy in that region, and that policy will be clarified if you would demand payment in renminbi.
Okay, excellent, thanks. Got raft of questions coming in now. There's one here. I think this is all Eason's territory, I'm afraid. One about if you have a holding company, a Chinese holding company in the free trade zone, does that make any benefits to making dividend payments to, I'm assuming it's an overseas holding company, further up the chain? Does it make dividend payments any easier?
Oh, I think the question that is I just mentioned, there may be in the future we have 25 points reform, which is promulgated by the government yesterday. So it mentioned the holding company in the free trade zone, if they do in the outbound investment, dividend back to the Shanghai free trade zone company can enjoy lower income tax. So I believe there is no additional treatment for the free trade zone company. They can enjoy the dividend payment headquartered in overseas country and enjoy the lower tax rate. I don't believe it will be.
Okay. There's a lot on tax. There's a query on cash pooling here. Are you aware of any cash pooling products available to pool cash in mainland China with cash pools elsewhere, for instance, Singapore or Hong Kong? Is it possible to do this?
From the Guangdong Shanghai area, which is exactly on the border against Hong Kong, if you set up business in there, you could directly access Hong Kong offshore CNH in Shenzhen. So that has been a quite exceptional policy to support business who are going to set up the local presence in Shenzhen, so which is the Shanghai free trade zone. It's just one part of that. So that policy actually started from Shanghai. So if you are based in Shanghai, you could also access the offshore rate, first of all, and it really doesn't matter where your money from, because you use the custodian bank. It depends on where the fund actually based. Very often, that is Hong Kong or Singapore.
Yeah, I actually had a question sort of along those lines. Was sort of, if you decide to locate in the free trade zone, who can you bank with?
Well, as first of all, the international banks, they are opening the local branches in the free trade zones already. That's particularly focused on the cross-border trade and the trade financing business, first of all. So for the international banks, with or without local branches based in China, in the domestic Chinese area, you would be able to move your capital around the border via the free trade zone, first of all. Secondly, which is the state-owned Chinese banks, for like Bank of China, ICBC, those banks, they're meant to facilitate the cross-border trade as well. They could use their kind of product via the FX or from some of the services they provide. So usually they trade either with Shanghai or Hong Kong, depends on which direction you want to go.
Yeah, so basically being located either in Shanghai free trade zone or anywhere else, you as a business you can be fully supported, likely by a member of your banking group, but at least by a fully capable international bank.
Not every single international bank open local branch in the domestic Chinese territory. However, the free trade zone is one of the more free area for the international banks to actually consider that option.
Yeah, and the more people who want to work in the free trade zone, the more banks will find it worthwhile to open up capability and branches there, presumably.
Oh yes, there'll be, if we visualize, will be probably like a Canary Wharf, but just in the larger size. People do travel in the morning, as Shanghai and the Tianjin now is starting to see more labors can allocate into that zone.
Yeah. I'll just test out the tax query here. I think this again might be one for Ethan or Jessica. What are the tax implications of companies in the free trade zone compared to companies located outside it? Are there any particular tax advantages, disadvantages, or implications that people considering locating themselves there should be aware of?
Hello. I have just discussed with Jessica, and he told me that there is actually no difference for the tax implication of the company in the free trade zone compared to the company outside free trade zone. So
okay.
The China tax, there is no.
Yeah. And I think that's a really good point. So the free trade zones are literally about free trade. It's not about trying to pick up any tax benefit. And furthermore, it means that you don't have to think through any, if you like, additional tax implications from being located there. It's simply designed to be an easier place to do business.
Yes, I totally agree with you.
Okay, thanks. I mean, just following up the ease of business thread, I think maybe Young for you. In a way, how easy is it to take advantage of the free trade zones? Because looking at statistics, I mean, admittedly it was outbound investment, but you've got the neighbouring Asia Pacific countries on the list. You've got the big tax havens, and you've got the United States. And after that, hardly anyone so far seems to be using it. But it sounds to me as if anyone who's either considering doing business in China or is already doing business in China should be looking very hard at setting up in a free trade zone and taking advantage of what's on offer. So how easy is it to do that?
The first of all is about rules. How do you want to play your local business in China? As Ethan pointed out, some of the holding companies has been targeted or welcome to set up the branch in the free trade zone to have more heavier capital operations. But I think the implication for the small and medium-sized business, which is about to go into China, without actually go too deep into the inland, unless you have a already chosen destination for manufacturing certain area, free trade zones would be the one area, because for one very simple reason, the shift of the capital in and outbound will be a lot more easier and free. So if you could be very open about some of the concerns about shifting capital from China and outside in the free trade zone, especially for small and medium-sized companies, capital cap, that wouldn't be a major issue.
Okay. Ethan, have you got anything to add to that?
I don't have. I agree with Yang, so I don't have any additional comments.
Okay. Again, this might be slightly specific, but if you're thinking of, if you want to find out more, who should the corporate get in touch with? Who should the treasurer get in touch with to follow this up? Yeah,
so from my point...
Are you there, Ethan?
Go ahead, Ethan.
Okay. So from my point of view, if the company want to follow up this question, follow up their business in the free trade zone, they can contact with the free trade zone government. So as I mentioned, I can maybe in the slide we can release the website of the free trade zone government. You can get many help from the website. They have policy information. They have investment investment instruction function on the government website. And secondly, we are welcome if the company they are interested in the free trade zone, they can keep in touch with our site because we are a development company in the free trade zone.
Okay. Yeah, Yang.
Just add one thing. I noticed from attendee list, I saw the chief representative of Shanghai Invest is listening to this course. It's Ms. Yan Pan. She's based in London. I would recommend to get in touch with her. I think communication channel could be either via ACT or Thomson Reuters. We're more than happy to facilitate.
Sure. Okay. Thanks very much. We've probably got time for one more quick question. I think possibly one for you, actually, Jan. It occurs to me that the free trade zone concept is it's almost a case of use it or lose it. Get in there, make use of it. It's leading edge, but it isn't bleeding edge. There is experience there. What would your recommendation be?
Well, if we look into the late 70s, when Shenzhen was firstly appointed as economic pilot city, first of all, as the border city against Hong Kong, now is just another moment for free trade zones to conduct a nationwide economic opening up policies. Those 4 free trade zones are meant to test out if the local practice and the policies going to work nationwide in the whole China. So some of these policies will firstly have water testing meaning, first of all, and also, especially for the small and medium-sized business going into those free trade zones, it is important to notice that you don't have to inject your actual capital in there. It is on claim base that it's more about a commitment that would eventually inject into, let's say, a couple of £1 million capital in your business there. So they actually look into your business activity first. They try to support you to get set up and running, first of all, and then to actually help you to go deeper into China via the free trade zone. So we see that goodwill from a nationwide perspective. And bear in mind, policymakers are also testing the best policy to support so. One implication is to the further shrinking of the negative list. So the sincerity is there, clear and bold. There's a certain level of education to the regulators as well, to teach them what is your business need and what they need to step up for you.
Sure. Brilliant. Well, thanks very much, Yang. And I think we're about to run out of time. Time has probably come to wrap up. I think the key point is that the free trade zones are there. Shanghai in particular has a huge variety of opportunity on offer. Obviously, a good and growing capability to host businesses of many different descriptions and the infrastructure to support that. So I think, if you're interested in growing your business in China, the free trade zones offer a clear opportunity for you to get ahead. My thanks to our presenters and to Thomson Reuters for their sponsorship. Thank you for everyone who joined today's session. I'm sorry if we didn't reach your question within our allotted time. As I mentioned at the start, we'll be putting up a recording of this webinar on the ACT website, along with the presentations in a couple of days' time, and we'll be sending you all the link to that. Looking forward to the rest of the year, we've got another webinar next week on foreign exchange. We've got our 3 big conferences coming up. We've got the UK conference in Manchester in May. We've got the Middle East conference in Dubai in June, and we've got the Asia conference in Hong Kong in September. And at least in that Hong Kong conference, I suspect many of the issues we've been discussing here will probably come up again. So I look forward to seeing many of you at some stage in person during the year. Thank you very much for listening. If you can spare a moment to provide some feedback on the webinar, we would be very grateful. Just select the feedback widget in red from the bottom bar, and the facility to do this will remain open for a short while after the webinar ends. So from all of us here, thank you and goodbye.